and a very good evening to you from the David Intercontinental Hotel here in Tel Aviv, Israel. With me, Gideon Rachman from the Financial Times, a leading expert on the economic crisis. Gideon, a very interesting discussion today at the session on the prospect of economic recovery in the Eurozone. What are the challenges that exist?
Well, I think that the Europeans are certainly feeling a lot more cheerful than they were this time last year, or certainly 2 years ago, when there was a real sense of crisis and a fear that you could have collapsing banks or a sovereign debt default in Europe. So that is slightly off the table, but there's still a lot to do. Growth is very, very weak, and there's this continuing rise in European debt levels, which will ultimately be a real problem unless they can find some way around that.
The disparity between monetary policy and fiscal policy within the union, is that an issue that remains a challenge?
Sure. I mean, in the sense of, trying to work out how you restore growth, there is a philosophical divide. A lot of, if you like, semi-Keynesian economists argue that Europe is being wrong-headed in pursuing very tight fiscal discipline, even as monetary policy is quite loose, because they say we need more of a stimulus. But policy is really being driven by Germany, in which there aren't many Keynesians in Germany, and they're very insistent on sticking to the budgetary rules, which try to get all budget deficits below 3%. So there is an argument about whether that's the right policy, but at the moment Europe is sticking with austerity essentially as the solution to the deficits.
Some of the challenges that exist from a political perspective, how would you articulate those?
Well, there are kind of two levels. The one is, can the governments agree on a package of measures that they're all happy with? And remember, you've got 28 of them you've got to keep happy. And there are big divisions, particularly between northern and southern European governments, over this issue, for example, of austerity, but also about whether at some point you want a much larger European Union budget, whether you want transfers around the Union, how politically integrated the Eurozone needs to become. So those issues are far from settled. And meanwhile, there's the second level, the popular level, because a lot of people with very high unemployment, slow growth, are beginning to get fed up, and you're seeing a drift to the political extremes in countries like Greece, but even in countries like the Netherlands, which are not generally regarded as the forefront of the crisis, but anti-European parties, anti-immigration parties are doing well in the opinion polls. In France, the National Front, led by Marine Le Pen, might even win the European elections. And if that kind of thing happens, that will reintroduce a sense of crisis into the European economy as well as into politics.
In terms of bank regulation, how's that playing out? So what are the challenges there?
Well, there are a number of issues. I mean, it's generally now accepted that Europe needs what's known as a banking union to underpin the monetary union, that you can't have sort of no integration in that level. So they're trying to do banking supervision, first of all, to give the European Central Bank the power to go in and monitor banks. They're doing a kind of a check of all the health of European banks, and eventually the possibility for the European Central Bank to close down banks. But then there's a whole separate issue of, well, if banks go bust, who recapitalizes them? Is that a national responsibility, or should there be a general European pool of money? And again, the more financially strong countries, in particular the Germans, the Dutch, are very reluctant to create a common European pool of money, because they essentially see that as asking them to bail out banks that are going under in countries like Spain and Italy, and they don't want to do that.
Gideon, the end game here, what are the different scenarios that potentially could play themselves out? A good situation, a bad situation, and perhaps a middle situation?
Okay. Well, the good situation is that growth does return to the economies, that we're essentially out of the crisis, and that allows the whole thing to calm down, a restoration of confidence, not just in the financial markets, but in the broader economy. And then in a more calm situation, Europeans can draw some lessons from the crisis and integrate further, but in a controlled way. A sort of middling situation is what the British would call muddle through. You don't have this terrible sovereign debt crisis or a default, but you don't really get growth returning, and it's a sort of incremental progress both economically and politically. A bad situation economically would be that the sovereign debt crisis resurges and you have a country like Greece eventually actually leaving the euro, and over the long run, if they don't actually find a solution to these political and economic problems, break up with the eurozone.
The investor sentiment currently, can you give us sort of any indication what's really happening out there?
I think investor sentiment is mildly positive because I don't think they can. If you're talking about a breakup scenario, it's probably 5 years and more ahead. Investors tend to think maybe, it's quite remote at the moment. So they tend to be feeling a little bit more reassured because the risk of immediate crisis has been taken off the table. And so people are now looking around Europe for value and thinking cautiously about recovery. However, that could change quite quickly if, for example, the audit of European banks showed up some really nasty problems. That could change sentiment. But for the moment, I think it's mildly positive.
Well, thank you, Gideon Rachman from the Financial Times, Branch de Graaf for the De Graaf channel here in Tel Aviv.